Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, overnight, big time data out of the Asian markets that are pushing all of our markets globally to the brink. Find out why in this video, so let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
So Bob, markets were looking honky-dory going into the evening session, and all of a sudden Japan and China just come out with surprise data out of left field, and here we are today. Markets are just red.
Yeah, I guess instead of a black swan, we got a Peking duck, So this is scary stuff, though, guys, because they can control our markets fairly well, but they can't control what's happening in Asia at all. And people don't really understand how these markets are flowing. Japan is a major source of liquidity into our stock market.
Right.
And if their market starts outperforming our market and their yen starts to appreciate, money is going to be flowing primarily out of the United States, but a few other countries back into Japan.
Right.
And that is not trivial. Okay, this is the last of the carry trades that are getting blown up. But the China one is scarier for me, Phil, because it's less about what's happening in the stock market. It's more about what's going to happen to the Main Street or our economic well-being, because China is very close to blowing up. And I want to then maybe just take a step back and look at this Japan chart. That's why you can never listen to the news guys. Look, they thought Japan was going to have a 3% GDP growth, and we had 6%.
Yeah, huge miss.
Bill, they're freaking clueless.
Yeah, that is a major miss on the forecast. I mean, to have your GDP print 6%, I mean, that's just massive. And like you said, if the reason why the markets don't like this is because Japan's like the last accommodative central bank, right? Everyone relies on Japan just having a miserable economy, always, never really have a threat of raising interest rates. So you have this cheap yen, and now all of a sudden with a hot economy, they're probably going to have to get defensive on that and actually start raising rates. So it's drastically changed the landscape in one print, how the liquidity feeds into this market, because you don't have, it looks like the threat of having a cheap yen anymore is going away.
Yeah, and the other thing too is this is real growth for Japan. I mean, their inflation truly is near zero, Phil.
Yeah.
And have a 6% unlike ours, where we'll show our prints are really negative to flat. But this is amazing. But let's go to the China one too, because this is pretty amazing. I'll let you speak to this one. I'll speak to the last one.
Yeah. So the other thing, it was like a 1-2 punch overnight. The Chinese central bank ended up cutting rates unexpectedly. They had already cut. Nobody thought they were going to cut again, and they cut again. And so basically what that's telling us is that there is no restart in China, and their economy is probably in much worse shape than even I think our markets were banking on. So you have, so that's really what initiated the dump overnight, because I remember checking in and it's like, wow, we got a big red hourly candle, and then looked up these data points had come in. So this is something the markets weren't expecting. China sneezes, I think it's going to have global implications in the markets, and that's exactly what's happening. And then this other slide we're going to show you what they're doing with their unemployment data. It doesn't give you any vote of confidence that things are going to get better.
The thing I appreciate about the Chinese more than about the Americans is they'll gaslight you. The Chinese just simply say, we don't have any unemployment because we don't report it.
Yeah, it's pretty wild.
But it's a big problem, though. 20% youth unemployment. They just said, we're not going to talk about it anymore. But they lie about everything. I'm on the record here for years telling people that everybody thought China was going to usurp the United States, and China is going to be lucky if they survive the decade intact. Right. And it's a really, 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 really big problem. And so what we got to watch for now, if China starts lowering their interest rates, what they're doing, the next thing they're going to do is devaluate their currency. And when that happens, we're going to wake up the next morning with probably a limit down market. Okay, because it's really going to shake foundationally what the underpinning of the games that they've been playing here in the markets. And you gotta realize with with China doing this, they're going to export deflation our way too, and they've been stockpiling oil and food now. They have 18 months worth, so they're preparing for a devaluation, and they're gonna try to shield their people from, at least short term, by releasing what they have in their strategic reserves. It's gonna be a big problem, Phil.
Yep, I agree, and the market's really on its heels here, and I think we have Fed minutes tomorrow, so I think the markets, what you want to see overnight, if you want to see any kind of bullishness, is you're gonna want to get back over last week's low, essentially somewhere in the realm of getting back over 44.50 on the SPX. Overnight, that would mean the futures have to get over about 44.65 or something like that to get back, and then potentially we could see a push up into the minutes. But Bob, I think we were supposed to have some strength, some tailwind into the OPEX that has not materialized, and then there's supposed to be a window of weakness after OPEX, and we certainly don't have the bullish flows that we used to. And in fact, now we're going into a window of weakness after OPEX. I think market's on its heels here, and I think we can start potentially seeing a move down toward the 4,400 mark on SPX. If that doesn't hold, I think a lot of this bullishness that we saw, basically from the beginning of the year, you can start unwinding a huge chunk of that. Wouldn't be surprised to see a 50% retrace of this entire move up as your first major downside destination, given everything that's starting to materialize here over in Asia and beyond.
I agree. Hey, look, we lost all our July bull trolls, Phil. So the way we're going here, we're going to probably lose the June and the May trolls as we as we unwind this thing. So this is serious stuff, guys. This whole move up that Phil and I have been screaming about for the last 3 months is evaporating, and these things go lickety split. Usually, what happens is the Friday before OPEX is green, the Monday, Tuesday of OPEX is green, and then you get a little bit of weakness Wednesday, Thursday, into Friday. Last week, we had popped on Monday. We sold every day last week. We popped on Monday this week, and we made a new low here on the week already. We broke the weekly low from last week, if I'm correct, Phil. Yep. And I think that's where you say maybe the only saving grace we have. If tomorrow they climb this thing back up, they may catch people, some late shorters. They may catch them. But after OPEX, there's two OPEXs, guys. There's OPEX for VIX and OPEX for the markets. And VIX OPEX is Wednesday. And after Wednesday, if they can't push this thing back up over the weekly, basically the range is that then we're probably looking for a market sell-off into Jackson Hole.
Yeah, so VIX expiration tomorrow. Generally, there's a bit of a lift after that. I think it expires at 9 a.m. Eastern. And then, like I said, we have the minutes, the Fed minutes that basically are going to recap their decision. That's all that really does from the previous rate decision. And then from there, we don't have a lot of gamma tailwind in the markets, and it's a window of weakness. So, and then seasonally, August is not so hot until you get to the tail end of August, and then there's a lift, but then you have to go into September, which gets rocky again. And then Q4, with the way Yellen's going to be issuing debt, the short-term fuel that this market's been enjoying is going away because she's issuing longer-term stuff. So it's really hard to make a bull case at this point. This wasn't even taking into account what's going on over in Asia. This is a new development overnight and has lasting ramifications. This isn't just a pump and dump news data. This is going to change things going forward, and you may see bigger institutional positioning materially change now from just buying a dip aggressively to now more defensive mode. And so I think it's gonna be a rocky Q4, Bob.
Yeah, I mean, agreed. I mean, look, if you have long-term positions, the only thing that's been holding up pretty well, energy and healthcare, and they rocked energy a little bit today, but I think over the next 2 weeks, energy is going to probably get their footings back, and then so you're watching people just pour in in a defensive positioning right now, and they'll abandon tech. And just remember, Goldman Sachs and Morgan Stanley have underweight the tech and the semiconductors. This China news is not good news. And next week is NVIDIA earnings, and they're probably going to disappoint. And you may see a $100 move down in NVIDIA. But it's going to be hard for you to short it because the option volatility will be so high that it'll make it nearly impossible for you to make money. So all you're going to have really is bragging rights that you called the sell-off. And then after that, you got to look for opportunities to get short NVIDIA because it's going to come all the way back to Phil.
Yeah, no, I agree. All right, guys, well, that's going to do it for this video. Let us know your thoughts. Thanks for watching. Please hit like and subscribe and smash that notification bell and set it to all if you can. Also, check out our specials and our newsletter. You can find those at tradegenius.co. We'll see you on the next video. Take care.
Trade Genius.